Hello everyone. Good evening. Today we are here to understand RBI announcement today. What all the announcement happened? That is on 8th June. This morning RBI has announced. So first highlight is what we have to understand is about a repo rate. Repo rate remains as unchanged, 6.5%. With this, the borrowers are may happy because banks are not going to be charged more interest. So that means EMI payers, all these things might be remain same. There will be no EMI extra charges because of this repo rate unchanged. And standing deposit facility, that is SDF, that is also remains same, that is 6.25%. What is this SDF? SDF is something like, bankers are having excess money, they will use it to park in RBI. For that, they will be calling it as a SDF, that is standing deposit facility. For that, they have fixed a rate of 6.25%. So the lastly, margin standing facility. What is this marginal standing facility? Marginal standing facility is the one key where if bankers are facing any financial issues or liquidity stress, they can get the money from RBI overnight, but that will be an additional interest. That's why that remains always higher than the SDF rates. So that is also remains same as 6.75%. So these are all the key highlights. And when it comes back to the inflation and growth, let's understand how exactly they have looked at on the inflation and growth. So anonymous decision to keep policy rate unchanged. They have not changed any policy rates. That is important factor here to understand this. It indicates that inflation is under control. If they are not increasing any policy rates, that means that's the first understanding is that okay, inflation is under well controlled. Even they are saying that inflation is much controlled compared to the November, and this is the 4.1 is in April is much under control. Maybe because of that reason as well, they have not changed the key policy rate unchanged. And finally, withdrawal of accommodation stands maintained. So what is this withdrawal of accommodation stance maintained? Meaning is simple. RBI is prepared to expand the money supply to boost the economic growth. So that means RBI is planning to become a $5 trillion economy. So they have to expand the money supply. If they increase the repo rates or if they increase the bond policy rates, all these things, then what will happen? Money supply will not happen. So we will be controlling the inflation. When the money supply is not happening at the consumer and industrial levels, what will happen? The economic growth might get slow. That's the reason RBI is prepared to expand the money supply to boost the economic growth. And lastly, the policy generally includes a lowering of interest rates. This policy, that means withdrawal of accommodation stance policy, it includes a lowering of interest rates, and even they might go one step ahead to apply this policy to reduce the interest rate as well. So in this situation, they have not reduced, but they have maintained by not increasing. They have not increased any repo rates or any SDF and MSF, and any policy rates unchanged. So this is a positive scenario for the consumers or borrowers or industrialists, businessmen. So this would be the positive impact to the stock market as well. Let us see how exactly stock market has come down today at around 230, 240. The stock market has come down. Is it the scenario that investors are trying to buy more at the lower prices? Let us see. This is at the current update. Thank you so much. Please do like, comment, and share our channel. Thank you so much.